Hey everyone, and welcome. Today, we're going to tackle a topic that, let's be honest, can feel a little confusing, maybe even a bit intimidating: life insurance. But don't worry. We are going to break it all down, clear up some major myths, and show you why it just might be the most important piece of your financial foundation.
Okay, let's just start right here, because this is the whole reason we're talking about this. People think life insurance costs more than 3 times what it actually does. That's a massive, massive disconnect between perception and reality. And that gap, it has some pretty serious consequences for a lot of families.
Because we think it's this expensive luxury, what happens? Millions of people just don't get it. They opt out. And that decision, based on a myth, leaves the people they love most in a really tough spot if the unexpected happens. The truth is, it's a tool that's way more accessible than you think.
So let's kind of reframe this whole thing. Forget about it being some complicated expense. Think of life insurance as a foundational piece of your financial plan. Seriously, this isn't just about covering final expenses. It's about protecting the future you are working so hard to build for your family right now.
Think of it like a financial Swiss Army knife. It's got so many uses. It can be a safety net, replacing your income for years so your family doesn't have to worry. It can be a debt eraser. Poof, the mortgage is gone. It can even be a way to build a legacy. Create an inheritance, support a cause you love, or with certain types, even build up your own savings.
So, if the cost isn't as crazy as people think, how do insurance companies actually figure out what to charge you? Well, it's not just a random number they pull out of a hat. It's all about assessing risk, and it boils down to a handful of key factors.
Age is the big one. The younger you are when you get it, the cheaper it is, for sure. Your health, both personal and family history, that obviously plays a big part. But here's the cool thing. Look at what you can control. Your smoking status, that's a huge one. Even high-risk hobbies can affect it. The point is, they look at the whole picture, and the healthier your lifestyle, the more you save.
All right, once you decide to move forward, you're going to face a fundamental choice that pretty much shapes everything else. And it's this: do you need coverage for a specific period of time or for your entire life? This brings us to the two main flavors of life insurance.
Honestly, the easiest way to get your head around this is to think about renting versus buying a house. It's a perfect analogy. Term life is like renting. You get protection for a set amount of time at a much lower cost, but you're not building any equity. Whole life, that's like buying the house. It costs more upfront, but it's permanent, and it builds cash value over time, kind of like home equity.
So term life is super straightforward. You buy a policy for a specific term, maybe 20 years, to cover you while the kids are growing up and you're paying off the house. If something happens to you during that term, your family gets the payout. Simple as that. It's pure, no frills, and incredibly affordable protection.
Now, whole life is designed to do exactly what it says: cover you for your whole life. The payments are higher, but they never go up. And part of that payment goes into a savings account, a cash value that grows over time. It's definitely a more complex tool, usually used for things like estate planning or leaving a guaranteed inheritance. And this is the slide that brings that cost myth from the beginning into crystal clear focus. Look at this. For a healthy 30-year-old, a $500,000 term policy is about $221 a year. That's less than $1 a day for $500,000 of protection. Now compare that to the whole life premium. It does different things, absolutely, but at a way higher cost. This right here shows why term life is the perfect fit for most families. So how do you pick? It really comes down to 3 questions. Number 1, what job are you hiring this insurance to do? Is it a temporary job, like covering a mortgage, or a permanent one, like funding a trust? Number 2, what's your budget look like right now? And number 3, think about the future. A lot of term policies let you convert to a permanent one later if your life changes. Okay, we're almost there. You figured out the type of insurance you might need. Now for the million-dollar question, maybe literally. How much do you actually need? Instead of just pulling a number out of thin air, there's a really simple method that gives you a great starting point. It's called the DIME method. It's an acronym. Just add up your D for debt, all of it. I for income. How many years of your income does your family need? M for mortgage. Make sure that's paid off. And E for education, the cost of college for the kids. Tally that up, and you've got a personalized estimate that's tailored to your life, which is way better than some generic rule of thumb. So let's wrap it all up. The big takeaway is this: life insurance isn't this scary one-size-fits-all thing. It's a flexible tool that is almost certainly way more affordable than you thought. Especially when you're young and healthy, locking in that protection for your family is an incredibly smart and surprisingly inexpensive move. And so we'll leave you with this question. Just for a second, forget all the myths and the confusion. Think about the people in your life and the goals you have for them. Now that you know the basics, what's the future that you need to protect?